Hello, chart watchers, and welcome to this Tuesday, November 20th Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we've got continuation to the downside today, although the major indices are well off their earlier lows. Dow Jones Industrial Average currently down 361 points. The S&P 500 down 27. The Nasdaq down just about 50 points, and the Russell 2000 down 11. 10-year Treasury yield down another basis point, but it too is off its earlier low, currently at 3.06%. Volatility Index shot up to its high for the month of November. Earlier today, it's backing off a little bit, but still elevated at 22.30. Energy takes over leadership to the downside today. It is down more than 2%. Financials also having a bad day, along with the industrials. Probably no area of the market getting hit harder today than the apparel retailers, though. Big move to the downside. It's off its earlier low, as you can see, but still pretty significant move lower, extending what has been a very rough couple of weeks for the apparel retail group. Within that space, L Brands down almost 13% on its earnings. Also, Kohl's with earnings down about 8.5%. You can see Kohl's breaking down below the last couple month lows. So overall, not a very good look at the market. Not a great picture out there right now, Erin. We're trying to hold on to those October lows. You can see the key the key indices all right at about those October lows. Nasdaq even slightly below. I don't know. What do you think? We're going to hold?
Boy, wouldn't it be great if we actually knew? Honestly, things are just still so soft. We're just not out of the woods. I mean, looking at my indicators, it's just, I don't know, Tom. I might be using the bear market words together. So.
Yeah, I talked a little bit in my blog about it today. Not a lot. I'm still in the correction mode. But the one thing first of all, there's a couple things that have happened that definitely occurred during bear markets. And that is the weekly PPOs turn negative, which we've now seen. And the volatility index, the last two bear markets, never went below 16. And on our last bounce in the S&P 500, the VIX dropped right to 16 and then bounced from there. And as I was mentioning, we're now back up the high on the volatility index for the month of November. So those two components actually are present. So I don't think you can really argue that this isn't a bear market, but I need to see the price breakdown. We saw almost this exact same setup back in early 2016, where we had the huge drop at the end of 2014. Market went up higher, and I'm going to talk about this in a few minutes. But the point is, we went back, we tested that initial shock to the downside, but we never lost that support level. And so I'm still looking at those February lows, and we're going to see whether or not we hang on to those.
Yep. I think that's really where the rubber meets the road as far as whether we're at a bear market or not. I'll be perfectly honest. I didn't really live through or study some of the big bear markets. I mean, I lived through them obviously, but I wasn't a serious technician at that point. And so I feel like I'm sort of feeling my way here. And thankfully I have Carl, we have John Murphy, all of these guys who have been doing this for a while to give their opinions on it, because it's just looking like something I haven't seen really. So that's why I'm more and more nervous as we keep going forward. So
it pays to be nervous. I mean, I think you're better off, like we've talked about, being a little bit more on the cautious side and preserving capital. Never a bad thing.
All right. Yeah, I agree. Okay. Well, let's see what's coming up the rest of the week. Obviously, it's a holiday week, but Greg Schnell will be in here tomorrow before we go on break for the holidays. We will not be here Thursday or Friday. And, Friday is Black Friday, but I don't know about you, but I'm excited about Cyber Monday. And I know we're going to have some really nice specials going on during Cyber Monday. So stay tuned for more information on that. Tom, you got a workshop on Tuesday after we get back, and then Mark Chaikin is going to join us on Wednesday. It's always great to have him on the show. Today's agenda, we're going to start off after the technical news with index analysis versus indicator analysis. I'm going to give you a workshop on that. 10 and 10 to 1, our very first symbol will be Builder's First Source, BLDR. That was a request we did not get to yesterday. And then Tom is going to finish off the program with chart breakdowns. I suspect there are quite a few of those out there, Tom.
I might find one or two.
All right, well, let's go ahead and get into that technical news and headlines.
All right. Well, there was one big economic report out this morning, the housing starts building permits for October. And you can see the housing starts came in a little bit less than expected. Building permits came in just above expectations. But we are actually having a pretty good reaction in the home building space. And that's continuing. We're starting to see, I don't know, it's starting to feel like a bottom is in on some of the home building stocks. You might think that's strange because interest rates, are still on the rise and may go higher. But remember, we've had a pretty rough 2018 in that space after leading in 2017. So anyhow, I certainly think there's a possibility we have seen a bottom in that particular area of the market. Okay, let's take a look at the 10-year Treasury yield as a result of this report. And we continue in this downtrend. I mean, October, November, even going back to September. September was rough for the small caps. October was rough for a lot of different areas of the market, especially technology and the Nasdaq and so forth. And then we've seen crude oil taking the big dive. And now we've got the 10-year Treasury yield kind of doing the same thing. It's a pretty steep decline. And when we look back throughout this uptrend that began back in September of 2017, when we were down around the 2% level, we've had a move up to 3.25. I mean, it's a pretty steep move. But the only pullback that I've seen really that compares to what we have seen over the past couple of weeks was back in May, where we were up to about 3.11%. We hit that 7-year high. And from there, it kind of made sense that we would pull back this much. But now that we've made the breakout, I don't know, I'm kind of watching this 3% area. I think if we break below 3%, what it's telling us is that the market is looking out ahead and it's not really liking what it's seeing. And we're seeing that with some of these high growth companies being revalued much lower in the course of about 5 or 6 weeks. But I think the 10-year Treasury yield, if we see that break below 3%, that's going to be a pretty interesting rotation into Treasuries, which are very defensive as we look forward. I'm not really seeing those same signals when I look at something like the railroads, but we'll maybe take a look at that in a little while. But there were a lot of earnings reports out, so let's go ahead and get into those earnings reports. As you can see, right down the list, just about everyone came in better than expected, except for Target. But we did have some weakness in terms of guidance going forward. Lowe's, which you can see there, lowered their fiscal year 19 revenue and earnings per share guidance. Analog Devices lowered their Q1 EPS guidance. Agilent lowered their fiscal year 19 revenue guidance. There were a couple that did raise. Well, they're not on this list, but Kohl's, which is a little bit smaller, they raised the bottom end of their fiscal year guidance. And Best Buy raised their fiscal year 19 guidance. And Intuit actually had a pretty good report. But right now, Intuit's in a bad space. Software, the market just doesn't want to take too many of those software stocks higher. So let's take a look at some of these charts dealing with the earnings. And first, we will start with Intuit. All right, Intuit, look at the breakdown. And, it was already, you can see the software had rolled over, but just a couple of weeks ago, Intuit was breaking out relative to the software space. It was actually holding up really well. When you look at Intuit, the second week into November, we weren't we weren't far from that high that we saw in early October, where most the software stocks have continued to crater. But Intuit did roll back over, and now with their earnings report, trading at about a 6-month low. So Intuit not really getting any kind of a pass, even though they did raise their Q2 revenue and earnings per share guidance. So, this is what you get when you got a stock and I'm going to update this, make sure I got the latest price, probably a little bit higher than this right now. Yeah, just a little bit higher, but still, unless we have a big reversal, this is going to be a breakdown on Intuit, despite beating top line, beating bottom line by a mile, and raising guidance in terms of both revenues and earnings per share. So that, unfortunately, is the environment we're in right now with software stocks. Moving on, we got Agilent, ticker symbol A. As I mentioned, they beat top line, beat bottom line, raised their earnings per share guidance, but lowered their revenue guidance. And this is a stock that was trying to make a breakout earlier today above that early November high, couldn't do it. And really, when you look back at the long-term chart, it just hasn't really done much. It's been in this trading range from about 60 to 75 throughout all of 2018. And right now we're sitting right in the middle of that range. Not a whole lot to do there. Medtronics. This is a medical equipment company. Broke out, big breakout back in August, went all the way back, tested the bottom of this gap support, and I think just now continuing to consolidate. Earlier today with this gap up, you can see on a relative basis, Medtronics is starting to strengthen versus its peers, and it's actually breaking out relative to the S&P 500. So it is moving to new highs. So even though it doesn't look great on an absolute basis, just kind of sideways consolidating, it actually is performing very well relative to the S&P 500. They beat top line, beat bottom line. They reaffirmed their fiscal year 19 guidance. Lowe's, of course, they're in the home improvement area along with Home Depot. And you can see this stock just seemed to have topped on a relative basis back in early October, has been drifting lower ever since. Today they came out, beat top line, beat bottom line, but they lowered fiscal year 19 revenues and earnings per share guidance. It seems to me like we're probably going to head back for that toward that April low, down closer to $80. Stock just at 117.50 7-8 weeks ago. Pretty steep move, but we've been seeing that across the board. TJX beat on top line, beat on the bottom line, but doesn't seem to matter. It's in the wrong space right now. Apparel retailers kind of getting hit like software, except it's taking place in a very, very brief period here. This was a group that was breaking out in early November. So we're talking about 8-9 trading days ago. We had a group that was breaking out, TJX trying to make the breakout. And now here we are, like I said, less than 2 weeks later, much different looking chart on both TJX and on the group in general. Target, also in the retail area, broadline retailers. The whole group has been coming down for the last 3 months. Target was an outperformer for a little while, and you can see moving up pretty steadily, but all of a sudden, volume picking up the past 7-8 trading days, and it's once again seems like the market is trying to tell us something about what it sees down the road. Ross Stores, very similar, same thing. Last 10 days or so, this is another apparel retail stock. The group was breaking out. Ross Stores was breaking out. Looked pretty good relative to its peers. Looked good relative to the S&P. And then all of a sudden, the volume has picked up here in the last 2 weeks, and right back down we've gone. ADI, just give you this last one here, analog devices, sitting in the middle of a range, but I think $90, that was a support level we broke on heavy volume in October, and we're trying to get back up and through that level. And while we've been doing that, you can see ADI relative to the semiconductors as a group, seeing a lot of love, a lot of money rotating toward ADI within the space. Now, that hasn't helped a whole lot versus the S&P 500, except maybe over about the last 4 weeks or so. We are starting to see some relative strength, but we still got a long way to go to hit that relative high that we saw on analog devices back in June. All right, let's take a look at a couple of charts. And these were in my blog. Let me pull this up real quick, and then I'll turn it over to Erin. But I wanted to just go through and show you technology here breaking down. Technology relative to the S&P 500 was getting very close to a breakdown. Software coming down, testing some key areas of support. And I would watch this relative support on software. We don't want to see the software group breaking down on a relative basis. So far, the S&P has been very weak. Software has just kind of gone along for the ride. It's been pretty rough sledding, but we haven't lost the key support. So that's something to keep in mind and continue to watch. The S&P 500 on a weekly basis, check out the trend line support comes in right at about 2,500 or maybe just above. And that was the low back in February. 2582 was our lowest close. And intra-week or intra-day, I want to say we were down to about 2530. I don't remember the exact number. But I think if we go down and lose this level, I think you can begin trading by bear market rules. Now, someone wrote me a letter, an email, and said, well, if we break down and that triggers bear market, wouldn't we already essentially be down to 20% or close to it? And that is true. But the market, if it rolls over, will likely show lower highs and lower lows going forward. So any bounces, you should be thinking about shorting. And when we come back down to test support or break down, take profits, let it bounce, short, completely different animal than what we've been talking about throughout this 10-year bull market. Okay, Erin, you got a number of upgrades, downgrades before your workshop. What you got?
All right, well, let's take a look. There weren't actually that many upgrades today, interestingly.
Shocking,
So,
right?
I know, right? So I was looking at a few and I came up with this one. I thought it was rather interesting. So CME Group was upgraded today by Berenberg from a hold to a buy. You know, it had a really great breakout, but today it is failing. You know, I would be looking honestly for a test back down to the bottom of this rising trend channel. You could preserve the rising trend and still lose a lot of price action here to the downside. So even though this has been upgraded, I would be watching if we get a close well below and into the rising trend channel. I would expect it to test the bottom of it. If it can manage to hold above it, it could just, you know, run up along the top of that trend channel and start a new one. But you know, the PMO is starting to turn over just a little bit. I would expect it to if we do start to go down to test that, the bottom of that rising trend channel. But everything looks pretty healthy on the chart, except for this tiny breakdown into the rising trend channel. So it's not one I would be picking up on right now, but I can sort of see why we would have an upgrade on that. And here we go, tons of downgrades. So let's see. The first one we'll go ahead and look at is Sienna Corp. And this one was downgraded by Needham from a buy to a hold. You can see that investors not real thrilled with the downgrade. But you know what? We were already losing speed and momentum coming into this downgrade. The PMO had already turned over. It attempted to make a move back to the upside, but it did turn all the way over, and it was already headed down before we got this big gap down on price here on Sienna. I would expect it to come down and close this little gap down here because we tried to and never actually did. So I'm looking for it to close that gap and probably test this area of support on the tops that we saw back in March and July. All right, Cabot Oil and Gas also downgraded today. They were downgraded by Goldman from a buy to a neutral. I thought this one was a really interesting chart on the downgrade. I think there could be some possibility that you could get a bounce off of what I would say is pretty strong support here. I mean, it lines up all the way back here to some of the lows in March, but it hits all of these tops all the way through this year. We got the big gap up breakout. You know, it made a little bit of a move to the upside, but it's coming back down to earth here. I would watch this support level. If it can hold that support level and we can get the PMO a little less overbought, I think that would be a possibility as far as a bounce goes. So something to keep an eye on. Matson downgraded today by Stifel from a buy to a hold. And as you can see, big gap down, breakdown. We have another gap that needs to be filled here, and I would expect to see that. You can see the PMO is topped really right at about the same place that we saw the top back in October. I would be expecting a drop that could very easily test the 200-day EMA, which matches up right around here to the low we saw back here in July. And right near here, some of the tops we had back here in February. So keep an eye on that. If we lose the 50-day EMA, I would certainly look for that gap closure. But on the downgrade, I find it doubtful that we'll probably be able to get out of that. All right, Micron was downgraded today by Robert Baird from an outperform to an underperform. So we went from one extreme to the other here on Micron. I decided to pull up the weekly chart just so we could see some of the really interesting support levels that we have here for Micron. First, before I show you those, notice the PMO is now in negative territory, which we have not seen since 2016 at the end of the big correction that we saw there. And so we have plenty of room for it to travel lower. And that's exactly what I would expect. You know, we lost the support right here at that top we had back in 2014. And now we're testing the tops that we saw back here in 2017. It's formed some support with that last low we had about a month ago. And now it's trying to see if we can hold on to that. You know, when I look at this PMO and honestly the daily chart pretty much as ugly, I'm expecting more downside for Micron. I think you should as well. Here's the daily chart, just quickly. Double top that has executed here off of this price rise. You know, the PMO topping below the zero line, all kinds of bad stuff going on there. Teradyne's our last one for downgrades. B of A downgraded from a buy to a neutral. And this one, similar sort of look as Micron. We have the double top here off of what was a nice rise. It looked like we were going to get a breakout to hold above that top in October, but no such luck. And now it is in the process of executing a double top. Length of the pattern basically puts us right down here at that support level at about 30. And, you know, we have the PMO just now peeking into positive territory, but you know, that breakdown on that short-term double top and a downgrade, I'm really not expecting much out of Teradyne. All right, that's all the upgrades and downgrades. Here is a summary for you. I'll have this in the Market Watchers Live recap, like I have all of our summary slides. A couple of other upgrades that I didn't talk about, BP, EQT, Fortinet was upgraded. And then, of course, on the downgrades, like I said, a ton of them. ExxonMobil, JD.com, Marriott, NVIDIA, Skyworks, Western Digital, all of those downgraded today as well. All right, so that's all I had for that. And now I guess it is time to start my workshop. So let's go ahead and get started on that. Give me a second here, Zach. I need display. Here we go. Make sure I'm sharing it properly. Right there. All right. Good. Looks good. Okay. All right. So today I'm going to talk to you about index analysis versus indicator analysis. And if you have a chance and you're watching live, go ahead and take the poll. I'm kind of curious about what you do as far as your index and indicator analysis. But I wanted to discuss with you the differences and the benefits of studying one versus the other, and what you might do and why you might do that, why you might study the indicators and not just the index. So here's what I mean. Let's just go ahead and dive in. So really what I mean by index analysis is really a study of each index individually. So you take your index and you look at all the indicators for it and see what it's saying. And then you can go with the indicator analysis, which is sort of the opposite way. You study an indicator across all the indexes. So for example, you could look at the McClellan Oscillator across all the different indexes and then get a feel for what's going on as far as breadth with the McClellan Oscillator and summation indexes. So I'm going to show you how you can do that, because it's not really an easy thing to just be able to pick up and find all the indicators to look at them across those indexes. So I'm going to show you how you can do that. But here's what we're going to talk about first. We're going to look at starting with an index and then looking at the indicators for that index. I'm not going to spend a huge amount of time on this because I suspect this is what we all do more often than not, is start with an index and start looking at those indicators to give us a feel for what's going on in that index. So why might we do it? We're probably interested in maybe the condition of that index. For example, the SP500, which is the one most of us study all the time, every day. So you might be interested in the condition of that index. Maybe you want to go look at the Nasdaq and find out the condition of it by looking at all the different indicators. Maybe you're considering an investment in a particular index, like the SP 600, for example. Maybe you want to evaluate the breadth and the PMO analysis. You want to look at all of the different market indicators that you can get on that particular index. So let's go ahead, and these are the places where you can do index analysis. And of course, you can do it on your own and not just use DecisionPoint. But I wanted to show you, of course, being the DecisionPoint lady, I wanted to show you how you can use DecisionPoint to do your index analysis and likely save yourself quite a bit of time. So let's go ahead and we're going to go look at, we're going to do a live example so that we can see the chart gallery and the DP live chart list and the various ways that we can study and index across, study and index and look at all of the indicators across that index. So I'm going to move us over into, there we go, let's go right on into, all right, so I'm going to start us right here off at the member homepage. So like I said, we're going to do an example here of looking at an index specifically and then looking at the indicators across that index. So what are the different ways we can do that? Well, first of all, for free chart analysis, if you're not a member, you can do the index analysis for the S&P 500 using the DecisionPoint Chart Gallery. But if you happen to be a member, basic or above, you can use the drop down and I'll also get the chart gallery for the Dow, the Nasdaq 100, and also the S&P 100. So I'll start here with the S&P 500. And what we look at is the trend. We look at the condition of that index. We check out the breadth. And then sentiment really is a market indicator that covers, you know, the market in general. So it's not a specific index, not specifically index related necessarily. All right, so I did my workshop 2 weeks ago on trend and condition analysis. So recommend you go and look either at the Market Watchers live show from that date 2 weeks ago, or I believe you might be able to find it on our YouTube channel as well. So you might want to take a peek at that. So here we go. Let's look at the S&P 500 and how you can use the DecisionPoint Chart Gallery. I'll try and scroll slowly through this. So first of all, we look at the trend, okay, but I'm going to be concentrating on the indicators, so I'm not going to spend too much time on this. We do have the PMO, of course, for that index, and that is an indicator. It's not necessarily what you would consider a market indicator, but it does give you a look at what is going on with the S&P 500. Yesterday, I'd expected a bunch of PMO sell signals to come in, and they didn't actually execute yesterday. But as you can see on the S&P 500, today, we should be getting that PMO sell signal. Seeing a PMO top below a zero line and then also give you a sell signal like this, this is really bad. I mean, let's be honest. We haven't seen anything like this on the daily chart, at least for the past year. We've seen where it did try to turn over. Of course, it wasn't nearly as oversold at that time, and it did whipsaw back up. So we'll want to watch. Hopefully, we'll whipsaw back up. But, you know, I'm looking at a PMO that's heading almost straight down into this sell signal. So we look at the weekly trend as well. We look at the monthly analysis. All of this is in the free DecisionPoint Chart Gallery, and you can get to that from the homepage. Now let's look at the condition of the S&P 500. This is where we start looking at the oscillators, the short-term ones that we have for that index. And as you can see, STOB, oversold territory trying to rise. That is positive for the short term. But this was as of yesterday's close. I suspect with a gap down today, we're probably going to see those turn back down. The intermediate term indicators, oscillators you can get here. Here are DecisionPoint ones, the ITBM and ITVM. And then we can go down into more market indicators, and we can look specifically at the S&P 500 and how many stocks are above the 20, 50, and 200-day EMAs. So this is another condition chart you can find in the DecisionPoint Chart Gallery. What this is showing you, what's lovely about these big picture indicators, which is another workshop that I did, you get to see the condition across the short, intermediate, and longer terms on these market indicators. For example, this one where we're looking at stocks above their 20, 50, and 200-day EMAs. Obviously, this is more of a short-term look, and this is a longer-term look when we're looking at the 200-day EMAs. We can make a comparison. You know, right now, we're at 40 this hasn't been seen since back in 2016. We haven't had these low readings since then, as far as stocks being below their 200-day EMA. So like I said, there are a lot of indicators out there that to me are showing information I haven't seen in quite some time, if ever. And that is one of the reasons I am worrying about the possibility of this being more of a bear market turn here. All right. PMO signal analysis is also there in the DecisionPoint chart gallery. And again, short-term, intermediate, and longer term. We can look at which ones have the PMO or momentum rising. We can look at how many are on those buy signals, meaning the PMO crossed above its signal line and remains there. I think it's good news, honestly, that we are seeing 70%, a little over 2/3 of the S&P 500 on buy signals. So I think that is should give you a little bit of comfort at this point about the S&P 500. And then, of course, we have the breadth charts as well. So I'm not going to go through all of these, but I just wanted to show you that if you go into the DecisionPoint chart gallery, you can get all of these indicators for the S&P 500, whether you are a member or not. Now, if you are a member, like I said, you can get the same indicators for the Dow Jones. And now you can look at the McClellan Oscillator for the Dow Jones. You can look at the net new 52-week highs for the Dow Jones. So you're getting all of our indicators for one specific index. So that's what I mean by indicator, starting with an index and then moving through the indicators. The other place you can find information as well on doing index studies in particular. We also have the DecisionPoint live chart list that I maintain. And you can find that by going to the DecisionPoint blog. And just like with the Market Watchers blog, you can reach our chart lists right there at the top. So this is my live chart list. And this is another way to go through and look at the various indexes separately and some of the indicators and the information that I find important right now. Unlike the DecisionPoint chart gallery, my chart list is going to have annotations. So I have those price trends on the weekly, monthly. I do this for all of, let's see, the Nasdaq, all of the scoreboard indexes. And then it also, I'm going to go really fast. So I also do the Russell 2000 daily, weekly, and the S&P 400 IJH. I look at that as well. So this is one way you can go in and look at the various indexes themselves and make some notes about how to do what's going on within that index. All right, the other way that you can do this, and I think is the best way to do index analysis, is to download one of the DecisionPoint ChartPacks. And let's go ahead and go right there. So if you go to your account, these are the DecisionPoint ChartPacks that we have right here. And the one I want to talk to you about today is the straight shots one, and we'll cover off the market indicators as well to some degree. But I wanted to show you straight shots first off, because I know I didn't really go over that the last time that I talked about the DecisionPoint chart packs. So you can get these chart packs. You just manage your chart packs, and you can install them, remove them, reinstall them if you'd like. But the main thing is that if you look here, the straight shots, you get complete indicator collections for 30 different market indexes. This is how you can go to an index and look at all the indicators across that. So I'm going to show you, because of course I have it, my chart lists, and I'm going to come down here. So obviously I have quite a few here. There's let's get to the DecisionPoint ones down here. Here we go. So I have the intraday chart pack. There's the market indicators, which we're going to go over in a little bit. But the straight shots one is the one I want to show you. And this is how you can go start with an index and then look at the indicators all across it. So for example, it shows that I have the sectors, but we don't have those anymore. That's just because this is an older version of the chart pack. But in fact, yeah, let's stay here. So make sure you can see everything. All right, so as you can see, so you can go into the chart pack. Let's do one that we haven't looked at yet. Let's look at the NASDAQ in particular. So when I pull up the NASDAQ, I have the price charts for different time frames. And then I have the various indicators that we cover for the NASDAQ. So if you recall, and the ones that I usually go over are the STOs, the short term. I usually go over the ITBM and ITVM. For the S&P, and those are the kind of the main ones that I look at, but we also have the BPA, the bullish percent index, we have advanced declines, new highs, new lows. So basically you can go in, find the index you want to get more information on, and then you can find all of those indicators for that. Let's look at the S&P 600. Give you an idea of what we have for that. There's your price charts. We also do the STOs for the small caps. So it's just a great way if you're looking specifically at something that you want to, an index specifically. Maybe you're interested in tech stocks. Maybe, like I said, you're interested in small caps like we are here. And then you can get in there and you can study all of the different indicators we have for it. I mean, we have AD lines for the S&P 600, quite a few indicators there. So now one of the things I want to show you, let's go ahead and move back into our briefing. All right. So let's start now and look at indicator analysis. And this is the one that I suspect not many people do. You can go in with the DecisionPoint Market Indicators chart pack and pick an indicator and then look at all of the indexes that we track that indicator for. So why might you want to do this? Well, it's great for relative strength analysis. Maybe you want to compare small caps, what's happening with their advances, declines, or new highs, new lows in comparison to what's happening in the larger caps, you know, the SP 500, the Nasdaq. Maybe you want to do some specific studies looking at just breadth. One that is very interesting right now is volatility analysis. I'm going to go over some of those charts. So you can start with the indicator and then move your way out. So how is the best way to do indicator analysis? Well, the best way, in my opinion, is using our market indicator chart pack. I don't know anywhere else that you can go and find an indicator, look at a specific indicator and find it across all of the indexes. So let's go ahead. I'm going to show you how to do that using the market indicator chart pack. So let's go back here. All right. So now I'm going to go back and we're going to view, let's go back to our member dash. And just a reminder, your control center, that's where you're going to find the DecisionPoint chart gallery right here. And if you go to the blog articles and click on the DecisionPoint blog, that's where you're going to find the DecisionPoint live chart list. So again, if you want to start with an index and look at all of its indicators, that's one way to do it. The best way to go with an indicator and then move out and look at it across indexes is using our market indicator chart pack. You do have to be an extra member or above. And the reason being is if you're a basic member, you're only allowed one chart list. And obviously, we have quite a few chart lists in these chart packs. So here are the various market indicators that we do cover. And these are the ones that you can look at across a lot of the indexes. I promised you the Volatility Index. So let's go ahead and we'll start with that chart list. We have the Volatility Index for not just the S&P, but we also have it for the Nasdaq 100, the Russell, Dow Jones. We even have gold and crude oil volatility indexes. So if you wanted to start right off and start looking across the board here, here is the volatility index for the S&P 500. I click next. And this is more of it for the S&P 500. Now we're looking at the OEX Volatility Index. One is inverted, one is not. This is the price as well. We can look at the Nasdaq 100's Volatility Index. All right. Haven't quite punctured the bottom Bollinger Band. This is on an inverse scale. I like to look at the VIX, the volatility indexes, in this case, the VXN, I believe. I like to look at this, I like to look for punctures of the Bollinger Band, because typically when you get those punctures, that's when you're going to see the price reversals, at least on a very short-term basis. And right now we need to get down here with a VIX over the 32, 33 mark. At that point, I'd start looking for a short-term pop to the upside. But right now, I think we still have some bearish sentiment that we need to continue on with. Russell 2000 Volatility Index. A lot healthier, isn't it? This is also the reverse scale. The Russell 2000, as far as volatility, is much lower. We can see it's at the top end of its Bollinger Band, meaning relatively it's stronger than the volatility. The bearish sentiment is not as strong on the Russell 2000. And it's actually a little on the positive side because we have spent most of our time above its average. So there you go. There's something right off the bat when we looked at just one indicator where we found something unusual and noteworthy. Maybe we want to look at the small caps right now for investments, just because volatility is lower, and it might be an area that investors are finding comfort in. Actually, I want to do the Dow. So, I mean, how handy is this to pick out one indicator and then be able to look at it across all the different indexes? All right, so let's look at a different one. I've been talking McClellan Oscillator. Let's look at the McClellan Oscillator chart list. We have the McClellan Oscillator for the NYSE, all issues. We have it for the Nasdaq. You can see right here, all of these. Again, I apologize. We don't have it anymore for our sectors. We just don't have the time to track that in our cloud services. That was something we used to do, but we still do have it for all of these different indexes. So let's look at the S&P 600. Remember, I was looking at the volatility. It looked a little more healthy. What are we seeing as far as the McClellan Oscillator is concerned? All right. Well, we've been above the zero line on the McClellan Oscillator. I think that is positive. We'll have to go look and see what's been going on with the Nasdaq on its McClellan Oscillator. The summation index is still rising. I don't know that that's the case if we look at the large cap indexes. So let's go look at them. I will look at the S&P 500 first off. Now, what are we seeing as far as the McClellan Oscillator here? Well, we do still see it has been above the zero line. That's positive. And we can see summation is rising. It's actually above zero. The summation on the 600 did not show that. So I think that is somewhat interesting here. I would be watching at this point, just when I'm reviewing this chart. Of course, we want to see where we're going to get some tops. The fact that these have been the lows on the McClellan Oscillator through 2017 and into 18, the fact that we dropped below that, well below that, gives me a little bit of concern. Now we need to see it's starting to top off as it reaches these bottoms that we had previously. So I think the summation index is not looking too healthy right now for the S&P 500. What does it look like for the Nasdaq? Go. Well, you can see it's spent a little bit more time below the zero line. Summation index is very unsure about where it wants to go, but it has dropped from the day before's reading to yesterday's reading. So it is actually starting on its way down, and look at how much more oversold it is on the Nasdaq. So that's one of the interesting things you can do as far as looking at indicators first and you can get an idea of relative strength that way just by seeing the differences in how these indicators react on the various indexes. So that is just about it. Let me go ahead and let's finish off and get our takeaways here. And then we'll look at the poll. So in summary, you know, I know most people do index analysis. You know, you can go in and take a deep dive into the trend and condition of just one index. So you start with the index and you look at each of the indicators for it, like in the DecisionPoint Chart Gallery or in the DecisionPoint Live Chart List, or best using the chart pack, the DP chart pack straight shots. Indicator analysis is, you know, now you're looking at starting with the indicator and you're doing a relative strength study. You're seeing what's happening with that indicator across all of the different indexes. So I think that that's an interesting way to do your analysis as well. So that's all I had for my workshop, but let's go ahead and pull up the poll. I'm interested in what everybody was thinking as far as that goes. And so I'm happy to see that you do at least study market indicators for other than the S&P 500, that you know where those are and how to get to them. I think that that's excellent. If you're not looking at market indicators for other indexes, hopefully I've given you a really interesting way to go in and take a look at those. And for those of you unsure about what a market indicator is, I did do a workshop on, I think I called it big picture indicators. Market indicators are indicators that are across a whole index. For example, those new highs, new lows, you know, you're looking at for that entire index, how many are, you know, having new highs, how many have new lows. So it's a market indicator. Unlike, for example, when you pull up a stock and you have a PMO on it. That's just specifically an indicator for that stock. It's not considered a market indicator, a big picture indicator. So Tom, do you look at indicators for other than the S&P 500? Like, do you look at the other VIX volatility indexes or anything like that?
Yeah, I use the VXN quite a bit with the Nasdaq 100 because I trade a lot of Nasdaq stocks. So I actually follow that probably as close, if not closer, than the VIX and the S&P 500. Although I probably write about the VIX more often because I think more people are familiar with it. Mm-hmm. But I use VXN quite a bit.
Yeah, and so now hopefully everybody has seen that. You know, you can get really into the weeds, I guess, if you want to call it that. I think for us, it's just interesting data rather than weeds, you know, by going into an indicator and then looking at it across the board. I don't think people are really aware that we do cover those indicators for those different indexes. So hopefully now you do, and hopefully now you might go in and experiment. Like I said, the DecisionPoint chart pack, just go to your account. In fact, I'm going to go ahead and I'll just do it really quick since I have a few minutes to explain how to get to. All right. So from your member dashboard or even any page, go to your account and manage chart packs. And if you are an extra member or above, you will have the opportunity to download these various chart packs. I've shown you today the straight shots chart pack, where you start off with an index and move on in to all of the indicators for that index. And then we went ahead and looked at the market indicators chart pack. And that's where you start with the indicator and then look at it across all of the different indexes. So that's how you would find that. And again, DP Chart Gallery, just go over to your control center and that's where you'll find that. And blogs, DecisionPoint, which hopefully you visit often. That's where you can find my live chart list. And again, that has the annotations on most of the, well, it has it for the 4 major scoreboard indexes as well as the S&P 400 and Russell 2000. So, all right, time for the 10 and 10. And I just looked down and my clock just flipped to 9:50. So perfect timing for this.
Awesome. Very good segment.
Thank you.
And I don't know, I'm assuming you probably haven't had a whole lot of time to work with the RRG. on
Exactly. I don't even know what stocks symbols were requested, but I'm going to go in right now. Go ahead and like some of those other requests. We already have the first symbol for Tom, and the second one is going to be what the most popular is. And then between those two, I should have all of them up, and I'll be picking what I think looks interesting, or different sectors, or certainly symbols we haven't looked at within the last week.
All right, I'm going to go ahead and take it and start with BLDR.
Yep.
All right, Builders First Source. Here is a chart. Obviously, we have been in a downtrend, so I'm looking at a series of lower highs and lower lows. And the last high that we saw was on the early November gap higher with very heavy volume. And we established what I think now is a pretty important resistance area up at about 1460, because that is where the sellers came back in, took it all the way back down to the recent lows. We do have a double bottom in. We'll see whether or not that holds. I think currently the stock is trading in a range between about 1170 and 1460. But the overall trend here is down. So I'm going to assume that the next move is lower to the downside. This is the type of stock, if I was shorting, I want stocks that are trending lower. I don't want to try and short strength. I like to short, I like to short into strength, but overall I like a weaker chart, a stock that has been underperforming. So these are the levels I would watch. I could always bring up that relative chart if you're not sure if a stock's been underperforming or outperforming. I think it's pretty clear relative to the S&P 500, this has been a laggard for quite some time. And as long as the stock is underperforming the S&P 500, that's when I generally want to try to get in on a short, is when it has a short-term bounce and gets near resistance. So I keep my potential loss pretty small and increase the amount of my potential gain by the stock falling again. So I wouldn't be shorting a stock when it's near support. I want to short a stock when it's at or near resistance that I'm watching. So your price resistance clearly at this point is up at about 1460.
All right. The most popular in the chat room is, well, there's a tie. We'll go at quite a bit of a tie. I'll probably look at all four of them, but let's start off with Verizon.
I thought we just looked at that one yesterday.
We did, but because it's one of the most popular, we're going to break the rule for it.
Okay. Well, I still like the stock. I don't like today's candle. So, I wouldn't have chased it anyway on this move to the upside. I'd be waiting for a pullback. Let's see how we finish today. But anytime I see something like that where I've got a bearish engulfing candle, this red filled candle, I'm just going to be looking for a short-term pullback. So if you go back and you take a look, here was a nice little uptrend. See the reversing candle there? We come down for 2 days. Here we got a nice uptrend, reversing bearish engulfing. We come down 1 day. Here we make a rally. There's a dark cloud cover. We come back down to the 20-day. When I see a candle like this, I'm thinking tomorrow, assuming that we end like this, that's really important because this candle is not complete until 4 o'clock today. So if all of a sudden Verizon strengthens into the close and we close back at 61.5, we're not going to have this reversing candle. But if we finish like this, I would expect tomorrow to be weak as well. And maybe we'll get that 20-day test. I would be a buyer of Verizon on 20-day tests. All
right. Wow, I'm really happy because people were paying attention to me because we only had 18 symbol requests today. That's pretty shocking. We usually have about 30. So that means everybody was paying attention to my workshop. I like it. Yes. All right. One of the other most popular was IWM.
All right. Well, this is a small cap proxy for the Russell 2000. We are testing support. I mean, if you're a price support player and you believe that the market is going to go higher and this is a correction, not a bad area to get into the IWM. And if it fails to hold, say 145, 146, you can get right back out, not risk a whole lot of capital. That's the good news. Bad news is there's been a lot of selling going on here. The overall market, when we look at like the S&P 500, we still have more downside. I do know that back in 2016, when the market, when the S&P went back and tested the prior lows, the Russell 2000 went below those lows. So it's very possible that the Russell 2000 goes below. But I would at least respect this support area. If I was shorting the IWM, I would be getting out. I would take my profits, look for a bounce to maybe reestablish that short position. And if I'm thinking more from a long perspective, then I think this move back down to test support is one where you can get in with a fairly tight stop and not risk a whole lot to the downside. The biggest risk is simply waking up to futures in the morning. If you're going to hold overnight, you just don't know what's going to happen the next morning. But strictly from a price, from a risk standpoint in terms of price, you don't have a whole lot of downside here.
Okay. One of the other ties for most popular was NVIDIA, which was downgraded today.
Yeah, NVIDIA, I'm going to talk about a little bit in the chart breakdowns at the end. I mean, we're getting a nice rally today. I don't really, at this point, I don't trust it, only because we had very, very heavy breakdown below the prior lows. You can see, I'm going to stretch this chart out a little bit, but that was a pretty significant breakdown that we saw before and continued moving continued this move to the downside with the open today. We're reversing. I think potentially we might come all the way back up to 170, maybe even 180 if the market, is healthy in the near term. But I think you're going to see sellers coming back in on that move to the upside. So first of all, I think if you go back to the low that we saw in early December, that was about 180. We tested that, we bounced, and then we broke down below this 180 level. I think that there is potentially a lot more downside on NVIDIA. However, the best entry on the short side would be allowing it to come back up and move back into the 160s, maybe even the 170s. You keep a fairly tight stop. You can see over the past month and a half, we haven't even been able to test the 20-day moving average, much less get through it. And that is coming down rapidly and will continue to come down rapidly. So I would be sitting here on my hands on NVIDIA right now. I wouldn't be long. I wouldn't be short. I think the best position based on this chart alone, forgetting about what the overall market is doing, I think the stock is under a lot of pressure. We've lost a tremendous amount of ground in about 7 or 8 weeks. I think a move back up probably into the 160s, and you could begin to build a short position, in my opinion.
All right. Let's see. Next one. How about a consumer staple? Walgreens, WBA.
All right. I like it. This is a nice looking chart, beautiful uptrend. There are still pockets of strength in the market, and Walgreens is in one of those. The pullback to the 20-day, you can keep a fairly tight stop in case we break down there. We did break out above the late January high, so in annotating, we could draw that line in there right there. We broke out, pulled back, tested that area, and then broke out again. And that latest breakout was right at about the 80 level at the 20-day moving average. So here was your breakout above that January high, went back, we tested it, and then broke out above the 80 level. And now we're just coming back down to test 80 along with 20-day. This is a position, this is a long trade I definitely could get behind. It's a much more, nothing is completely safe, but relative to what we've seen in software and those kinds of areas, I think it's a fairly safe. You could even put a stop in below today's low, 79.22, which would be about a 1% risk to the downside. And you could be looking for maybe $3 upside, which would be almost 4%. So about a 4-to-1 reward to risk off this 20-day. So I would be okay with WBA, just looking for a quick profit.
Okay, let's see the next one. I know we haven't looked at this one. eHealth, which is a life insurance industry. EHTH.
Yeah, I love the stock. Really nice breakout back at the end of October. This is in the life insurance space. And even though life insurance stocks have not been performing very well, eHealth has done extremely well. And I think with the Fed telling us that rates are going to go higher, if in fact they do go higher, normally that's a good thing for life insurance. And you've got one of the better stocks here, I think, as long as it remains in its uptrend. So I would say maybe give it down to the 50-day moving average. Below that, I'd be concerned. But I think this is one that you could just trade in this range for now. And I'd ultimately be looking for a breakout over 36.
All right. Next one, let's look at, let's see, it's a REIT, Sabra Healthcare REIT, SBRA. I always think of the hummus whenever I see Sabra.
Well, you can see the gap down, all the selling and the buying kick in at about 1840. We go all the way back up, not quite to fill the gap, but we test that 20-day and then come all the way back down again. I think it's pretty clear the trading range has been established. I would maybe not expect it to get all the way back up over 21, though. I think for me, I would be looking at this falling 20-day moving average now as key resistance. That's where the failures came just a week and a half ago. And so I think if we do rally back up to that level, that would be the key resistance. Volume trends, horrific. A lot of selling on the downside here. So I think that there's a lot of distribution taking place. So any kind of a rally to me sets up a short here.
Okay. Let's see. Next one. And this one was one of my Monday setups, not this week, I think, but the week before, 2 weeks ago. NRG, Energy Incorporated, NRG.
Yeah, I mean, I think it's doing pretty well. It came out with earnings and pulled back. I remember that, and then broke out and is now, it's still in this uptrend, which I think is very bullish. And so if I had a position, I probably would maybe just keep an eye on the channel that it's been in. So if we take a look at the, connect these lows right here, and then drag this up here, I'm going to say that the channel is right now down around 36.5. Maybe give it to the low, that last low from earnings. So I'm going to say keep a stop on it, maybe below $36. But I would look for it to resume and maybe head back up toward the upper end of the channel, $40, $41 or so.
Okay. Let's see, number 9, BGS.
All right, BGS, B&G Foods. Well, it's in a pretty decent area. We're not far from a test of some key overhead resistance. Let's annotate, get that line in there. I think it's pretty clear on this chart that resistance comes in at about 32.40. We had a move up there in late June. We tested it in July, came back up, tested again in August and September, and then went back down and failed to hold support. And you can see coming back up, I mean, it almost looked like it was rolling over. And now it's kind of worked its way back up into the middle of this range. And I'm assuming probably because of the area of the market that it's in, we've seen a lot more money rotating into the staples, some of the food stocks. So I think for now, I would trade that rising 20-day moving average. So any kind of a test of that would be an entry point for me to the downside. So just kind of watching this as we go forward. And to the upside, the resistance level 32.40, I'd keep an eye on. That's where I'd be selling until it can show a definitive breakout there.
All right. And our final one for our friends in Canada and our only industrial sector request, Waste Connections Incorporated, WCN.TO.
All right, WCN.TO. Well, I mean, it looked like it was putting in a reversing head and shoulder there, but we're now potentially going below that neckline. So what I was looking at here was this coming across as perhaps, and I guess if you connect candle bodies, you could maybe draw it down as low as that. If you were drawing intraday moves, it would be there, and you could kind of see that we've already fallen below that neckline. But let's give it the best case scenario, and let's just say that that is the trend line. So off of this move to the downside, left shoulder, neckline, head, back up to put in the right side of the neckline, right shoulder, and then a breakout. Now, the problem I have with this pattern is when I see patterns, I want volume to confirm. I think that's a big part of pattern analysis. And on the breakout here, I mean, as it's making this move up and getting through the neckline, I'm seeing deteriorating volume. We did have one day here, but that was after the breakout had already been made. I don't know. I'm just not liking what I'm seeing here. It seems to me like maybe we're rolling over. And I think moving back below 99 would really put a damper on this particular pattern. And if I'm looking at the shoulder support, which is around 97, which also lines up with a major support level back in July, that would maybe be like a final line in the sand. But it looks to me like the overall trend here broke. We tried to put in a reversing pattern, didn't really confirm with the lesser volume. So I think we're going to roll back over and probably go back toward these lows. So I'm going to be a little cautious with this one.
Okay. And that does complete the 10 and 10. Here are the symbols that we just went over. I will have these up in the Market Watchers live chart list. And you'll get those with the annotations, etc. You can find all of that. Just go to the blogs tab and click on the Market Watchers live blog, and there you will find the link at the top, as well as handy recaps that I do every day. So you can find timestamps and, figure out which things you want to watch and how to quickly get to them from our Stock Charts YouTube channel. All right, it is time for our final market update. Let's go ahead and see what is going on. From what I can see, nothing good. So let's go ahead. All right. It does look like the markets did try to make a little bit of a comeback. We saw an intraday low earlier in the morning for most of the large cap indexes, but we've managed to take back, it looks like on the SP 500, almost half of the losses. Nasdaq's making the best move toward the upside, but still down right now. Nasdaq is currently down 1.3%. The Dow, which we can see the big gap and moving sideways, that is currently down 1.82%. OEX also suffering, and of course, we're seeing mid caps following along. The S&P 400, having a big drop, looks like it's going to go down and challenge the lows from this morning. Similar situation for the Russell 2000. Canadian markets following suit with the big gap on the open, the move off of the intraday low from the morning, and now it looks like we're getting some consolidation sideways. Treasury yields are mostly unchanged, reading 3.056. Look at the dollar, UUP. Big gap, and now almost in parabolic fashion here, making a huge rise. Currently, UUP is at 25, just above 25.82. Real interesting looking chart. And gold, very volatile as far as the 10-minute bar chart goes. It opened higher alongside the dollar, which opened higher. It did pull back quite a bit. Notice pull back almost at the same time we got a pull back here. And this is what I'm talking about with the decoupling of gold from the dollar, that this is something that you can certainly see. We did move to the upside up and toward lunchtime, and then we've pulled way back though on gold. Currently it's down 16 cents at 115.51. But yeah, the dollar having a nice day so far. TLT mostly unchanged, up 8 cents at 115.10. And USO, very difficult day here, gap down. Seems to have found an intraday low for support, but we're seeing USO now at a price of 11.42. It's down almost 6% today. So very oversold look to it. That's all I have for my part of the final market update. Tom, I'm going to pass it back to you.
All right, sounds good. I just want to take a quick look at the S&P, looking back over the last year. I talked about that February low, and here it is over here at 25.82. We tested it back in early April, went below on an intraday basis. By the way, we did, let me give you that intraday number. The intraday low, 25.32. So that was the intraday low, but the closing low, we haven't seen a close below 25.80. Actually, that was 25.81. I thought it was 25.82. There's a 25.81.88 close. We got back in late October, went as low as 26.03. So still about 20 points, 22 points above that closing support level. And now you can see today we got a low in at 26.32. So we're not, we still got probably another couple percent, 2 to 3% to get down to that level. I think we're probably going to do it. And to the if we take a look at the shorter term hourly chart, and I can annotate this one, I think that the breakdown and the gap lower today was pretty significant because we did have this gap support over here from October 30th where we had gapped up, and we had come back down in mid-November twice, including yesterday. We were trying to hold on to that gap support level. Today we broke below it. So the levels that I would be watching now in the near term, down around that 26.30 level. I think if we break much below that, we got close earlier today. If we weaken, that's going to be problematic. And the other thing to watch, anytime we are downtrending, and we've talked about this quite a bit, but anytime we are downtrending and you take a look at the 60-minute chart, that 20-hour EMA. I mean, the last time we were in the downtrend, every time we came up, well, not every time, but after about 3 or 4 times, we kept failing and going lower. And then we had this little, we tried to hang on. I mean, obviously, this was a much weaker advance than we saw decline over the prior week or so. But as soon as we broke back down below the 20, you can see the selling accelerate. So if we move back up near 2680, 2685, we're going to have a lot of short-term overhead congestion that the market's going to have to deal with. And it's going to have to do it a lot better than it did it just a few days ago. That rally was not very strong, could not get through reaction highs. So I think the market's got some issues here in the near term that makes me believe that we're going to probably head back to test that February low, and then we're going to see what happens. I think you said it best earlier, Erin. We'll see what happens when the rubber meets the road. We'll see whether or not the bulls can pull it off again, or whether or not the bears take control of the market. Okay, I am going to move into the final segment, which is chart breakdowns. I'm going to do a couple of different things here. First thing I want to do is just show you, if I was looking at the market and I was thinking more bearishly and I was thinking about shorting, which I am not at this point, I will begin shorting if I believe that we are in a bear market, and then I will start playing bear market rules until they don't work. But what I would be looking at right now is when you go into the sector summary and you look back over the past few months, you're going to see the areas that really have been leading to the downside: technology, communications, services, consumer discretionary. These are probably the areas that I would look at most. I don't trade a whole lot of energy stocks, but these other 3 areas are aggressive areas that have been beaten down. And if we do get a rally and we get up close to those resistance levels that I just talked about on the S&P and similar type resistance levels on the Nasdaq, and I wanted to short, that would be the time. Wait for the bounce, get close to some resistance levels, and then potentially short. Now, if I go into the individual industry groups, and let's just take a look again over the past 3 months, internet stocks obviously have been very weak. When we go into consumer discretionary, you've got toys, furnishings, gambling stocks at the bottom of the list. Let's see, what else do we have? Under industrials, transportation services, clearly very, very weak. I mean, these are the types of groups that I would be looking at to try to come up with some possible short candidates. Now, if I go back to the internet stocks, one way, without doing any scans or anything, if I just pull up the internet stocks, because I know they've been weak, and I'm going to sort them by scooter. And I'm going to go down and take a look at some of the bottom scooters. These are the ones that have not been performing well. You go down the bottom at the single digit, those that have single digit scooters: Snap, Activision, Electronic Arts, Facebook, Baidu, Netflix. I'm going to focus on Facebook and Netflix. Facebook, because I think that earnings report I had back in July was horrible. I said it back then. The market doesn't forget those kinds of things, and we have continued to trend lower. Yes, we gapped down trying to rally here, but I tell you what, if Facebook got back up to 140, that was the prior low. That becomes resistance along with that declining 20-day. I think Facebook is in breakdown mode, and any kind of a rally back up to 140, and I would be considered, well, I won't, but if I was thinking about shorting, Facebook would be on the top of my list. Netflix was another one, so let's pull Netflix up. Netflix broke down below this 270 area, and I'm going to pull this chart up on a 1-year chart and show you the longer term, because I got a real problem. Actually, let's go back and show maybe even 3-year, because what I'm seeing here on Netflix is a pretty ugly topping head and shoulder pattern. And if you look at those lows that we established back in April, this low right here, and then again in October, that's a neckline. Right before it is the left side, that's the shoulder. We kept rallying, print the head, come back down, establish the right side, bounce into a right shoulder, and then we break down. Now, I'm going to flip this chart, because normally what I see are what I look for bullish charts, and I look for breakouts. And when they come back and they test support, that's normally where I'd want to get in. But I've also said that sometimes you get that move back down below price support to test the rising 20-day moving average. Well, in this case, I think what we could see on Netflix, especially if the market bounces in the near term, I wouldn't be surprised to see Netflix maybe move back up one more time above the neckline, maybe even as high as that 20-day moving average, which is at 301 and dropping. But this measurement right here, and if we give it a, let me see if I can get the measurement here on a percentage basis. If we take a look here, we had about a 35% drop from the high down to the neckline. And if I grab that, I don't know if I can do this. Yep, I did it. So if I grab that over here and I take a look at another 35% decline, which would be a measurement on this Netflix chart, it would take us down to about 170. That would be very painful, but I'm telling you, these charts, a lot of times you see these formations, you want to be really careful when they break. Now, again, I think maybe Netflix comes back up, gets back through this neckline, maybe attracts a few more buyers. I don't think it's going back up above that 20-day unless the market overall really begins to show a lot of strength. But based on what we're seeing right now, I think Netflix on any kind of a move back up in this 275 to 300 area, I think is a short candidate. All right, within the toys, I pointed out that toys have had a pretty rough go. Well, let's just take a look, and I'm going to use a long-term chart again here. Mattel has just been horrific. Continues to weaken. You do see some support here in the 12.5 area. So I'd want to see a bounce, but that that declining 20-day moving average has been holding as resistance, and I think it would hold again. So I think Mattel is one to keep an eye on. Within the furnishings area, Leggett and Platt, pretty big breakdown below the prior lows in the 39.40 area. Went all the way to 34. Now we've bounced back up. I think 38.39 is a key area on the stock. This is another one clearly has broken down. It's bouncing back up, giving an opportunity for a potential short. Wynn Resorts, gambling stocks have been awful. Look at this chart. It cannot get back through, can't sustain a move through its 20-day moving average or 20-week moving. Oh, no, 20-a-day. Got a daily chart up here. But once that trend line broke to the upside, we have now been in this downtrend. And so any kind of bounces to get back up and test the upper side of this downtrend, to me, would be a short opportunity. So I think anything back toward maybe 107, 108 area, maybe even as high as 110 with a stop probably above about 114, 115. I think that short setup would be pretty nice. And then let's move into the transportation services area. XPO stock clear breakdown. All right, it's kind of hard to see these prices, but let's go ahead and actually I'll just shorten it down to a year so we can see these levels a little bit closer. But huge move down. We have not even gotten a 20-day test throughout the 7 or 8 weeks of move to the downside from 115 down to 70. We're going to get a bounce at some point, and if we do, I think this is stock clearly in breakdown mode. And if we were to get anywhere back up close to that 80, 82 area on a bounce, I probably won't see that much, but that's where we had broken down from that late October low. Anything up close to 80 would probably represent a really good shorting opportunity on XPO with a fairly tight stop. And then the last one in this same space, transportation services, Ryder. I know Ryder rents trucks, but Ryder also is creating some value for shorts. Beautiful move down from a short perspective, beautiful. Big move down. Look at the volume, capitulatory, very heavy volume. Even with that capitulatory move to the downside, the bounce was almost nothing, and now we've broken back down again. I think if we get back up into that 55 area, close to the 20-day moving average, that would probably represent a pretty good short opportunity on Ryder. Okay, so that's one way looking for short breakdowns is simply going into industry groups that have been weak over the past 3 months. But let's say you're not looking at industry groups and you just want to find some bad-looking individual stocks. Well, if you go into the predefined scans and click on the 52-week lows over here, I'm just going to go through the Nasdaq. I mean, there are just so many of them, like 788. I'm not going to go there. But let's just pull up the Nasdaq, the 202 stocks here. Now, we've talked about this before, but you can go in here and click to edit the scan, because if you're looking right here, I could take this whole list and just drop it into an existing chart list, which would be great, except I got a lot of stocks over here with light volume. Here's one that's only got 5,000 shares, 60,000 shares, come down 52,000. I mean, these are 33,000 there. And then if you look at price action on some of these, that doesn't show the price here. Well, actually, yeah, here's a price, current price. You can see 44 cents, 45 cents, $3, 28 cents. I want to get rid of all this stuff. So what I can do is I can take this, click to edit the scan. First of all, I'm going to get rid of the over-the-counter bulletin board. Not interested in that. So let's get rid of that. And then just going down here, and I can filter out by choosing a couple of these. I'm just going to select the price. So the closing price, which intraday is just the current price. And the default is a close greater than 99. I don't want that. But I want closes to be better than $5. Anything less than $5, I'm not going to consider. Many stocks below $5 you can't short anyway. So that is one change I'm going to make. And then I'm going to look at volume. So here, if I add volume, it says volume greater than basically 10 million shares. I want to make sure that my volume currently is at least, I mean, if we're breaking down to a 52-week low, volume should be at least 200,000 shares. So I'm going to add that. I'm going to check the syntax, and it says it's fine. Now I'm going to rerun. And instead of having 200 stocks, I'm now down to 77. So this is a more manageable list for me. I am going to replace my existing chart list. Don't really have it in any particular order, but I am going to put it into my scan results other and click. And now I've got it sitting here in this order. Now I could sort it by scooter if I wanted, take a look at maybe some of the stocks with a higher scooter rank, but I'm trying to find weak stocks. So I'm going to look for stocks that have much lower scooter ranks. Now, I'm not going to go through all of these, but what I wanted to do is maybe just pull up a few of them. So let's take a look at several of these. NVDA, huge move down. We talked about this one earlier on the 10 in 10, but let me straighten this, or let's lengthen this to a couple of years, 2.5 years. And you can see that there's a lot of technical damage here, and the failure at the 20-day moving average is clear. We can't get back through it. This is a completely different animal than anything you have seen on this chart for the last 2.5 years. You got a downtrending chart. Now, 180 to me on this stock is very important resistance. So right there, here was a low, kind of a breakout area right near 180. Maybe it was up around 190, but we pulled back, established a key low around 180, came back up, and the one big bounce that we had was right off of 180. So I think we got a neckline here. There's a right shoulder. Over here's the left shoulder, and we've broken down. So you've got NVIDIA now with a head and shoulders breakdown. And if you're looking for high volume to confirm it, I think that's pretty high volume. So I think on any kind of a move back up, and I was saying this earlier on NVIDIA, 160s, if it were happen to get into the 170s, I don't know if it gets back up there, but I think your reward to risk would really start to improve on a short on NVIDIA if we get back up there. Let's take a look at a couple of others here. I'll go through these pretty rapidly. JD.com. JD just reported earnings. I think it's pretty clear we had a double bottom in play. Look at the volume pickup on the breakdown. So that prior resistance, which was up close to 22, that prior support, which was near 22, now becomes resistance, along with the declining 20-day moving average. Look for a bounce on JD to potentially short. ALGN, Align Technology. This is a stock in the healthcare space that was incredibly strong for a long time. It is being revalued, no doubt about it. I think what the market is saying is that the anticipated growth rate of this stock is being decimated. The market is saying, nope, that's not what we're going to see. And so you got to pay attention to what the price action is telling us. But here we've got a clear breakdown, can't even get up to the 20-period moving average. So anything close to that level, the stock's come down from 400 to 200 in 7 weeks. It's been cut in half. It's going to bounce. It's obviously very oversold, but the bounce back up near that 20-day moving average could be very shortable. I would say the 20-day along with the reaction high up here around 245 or so, that combination is going to be really difficult for the bulls to pierce back to the upside. All right, let's take a look at SWKS. This is one that definitely is breaking down, has broken down. Look at the volume here below that October low. So while the overall market might be coming back down, testing the October lows, you've got stocks that are much weaker. And these relatively weak stocks are the ones that on bounces I would be looking to short. So SWKS, you've got gap resistance 77.50. The 20-day is right around that level. The prior price low is around 79. That area on any kind of a bounce, and you might say, well, it's never going to bounce up there. Well, if market bounces, some of these stocks will get a 10% pop. I don't know at what point, but they very easily could get a quick pop. So anyhow, on that move to the upside, this would be a short candidate for me. STMP, stamps.com. This thing's just been going down every day. I mean, if you're shorting this, it's been an ATM machine. Trying to put in a reversing candle. 20-day moving average, I think, is going to continue to present a lot of difficulties for this stock on any kind of a rally. So big volume today. If it does get that bullish engulfing candle and finishes closer to the high, I wouldn't be surprised tomorrow if we get another pop and maybe back to that 170, 172 area. But that is going to be a difficult area to get through. Not Best Buy, Bed Bath & Beyond, BBBBY. Here we've got a breakdown below the late October low, and you can see the volume picking up on this push to the downside. And let me just say that on a relative basis, when we're talking about some of the specialty retailers, they were near a high just back at the beginning of October. Bed Bath & Beyond was nowhere near its high. So what does that mean? You got one of the worst performers in the group, and the group is breaking down. So that doesn't bode well for a stock like Bed Bath & Beyond. Any kind of a move back up to about 13, I think, would represent a short opportunity. And then, of course, with breakdowns, you also have false breakdowns. So the last thing I wanted to mention was on Kulik, KLIC. When you get a stock that breaks down like this and then comes back up, to me, this looks like an exhaustive type of bottom. I think KLIC, along with stocks like Applied Materials, may be putting in bottoms here based on the recoveries that we're seeing after their earnings coming out. Okay, let's pull up a quick summary. Went through a number of stocks there. These are the ones that I looked at that have breakdowns, with the exception of KLIC there, reversing possibly some sort of an exhaustive gap today on that one that could mark a very significant bottom there. But otherwise, many of these other stocks in big trouble. And if the market overall breaks down, the S&P loses that level in February, some of these stocks are going to get hit a lot harder. All right, Erin, it is time to wrap it up. Market
is. Hey, we had a great question in the chat room. I think you can answer pretty quick. I know I did. What do you typically do with where do you park your money right now when things are volatile and uneasy?
I'm 100% cash right now.
All right. I would say that typically I am still invested in some of my longer term investments just because they are in good sectors at this point. But typically I move all the way into cash, and then a lot of times I get into metals as well. And I would have done that this time, except I just don't think gold is performing like it should, even in the difficult times we're in right now. I would have expected it to do better.
Well, I would just say anytime you got the volatility index in the 20s, cash is not a bad place to be.
Absolutely.
It's very, very basic, simple risk management right there, because it's a very risky environment, and cash is a good place to be when it's risky. But
yes.
Anyhow, let's go ahead and wrap up. I want to thank everybody for being with us today. Thanks, Erin, for your great workshop. I'm sure a lot of folks got a lot out of that, and I'm sure Erin would like to hear what you got out of that. So complete the survey as you exit if you don't mind. We do always love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, and we will see you back here tomorrow. Happy trading.